You are watching a recap of the Asian session. Optimism prevailed in the stock markets on a Tuesday morning, so stock indexes managed to rise. Japan's equity market is closed today on the occasion of the spring equinox. Australian and New Zealand stocks went up following an increase on Wall Street. Fears over the banking sector have subsided. The prompt actions of governments and the central banks help to mitigate the crisis and support the struggling banks. 6 world's largest central banks announced a coordinated effort to maintain stability in the global financial system. The Fed offered daily currency swaps to ensure that banks in Canada, Britain, Japan, Switzerland, and the Eurozone will have enough dollars to operate. A swap is a short-term agreement to sell securities in order to buy them back at a later date. Christine Lagarde said on Sunday that the regulators stand ready to provide emergency support to Eurozone lenders. For this reason, speculators are looking forward to the Fed meeting, and they are expecting the Fed to stick to a less aggressive stance given the turmoil in the banking sector. However, inflation remains high, so the regulator could undertake a 25 basis point rate hike. According to the FedWatch tool, markets are pricing in a 79% chance of a 25 basis point rate hike. At the same time, 21% of speculators are still betting on a pause. For comparison, yesterday we talked about a 50-50 ratio. As you can see, expectations change very quickly. As the forecasts differ considerably, there could be a surge in volatility, especially after Jerome Powell's speech at a press conference. Therefore, it's better to remain cautious. Given the woes in the banking system, further tightening may only deteriorate the situation. Besides, speculators do not know what to expect from the meeting scheduled for March 21 and 22, and this is why one should brace for sharp price swings. The greenback regained momentum in the Asian trade. It has been declining for several sessions in a row. It faced bearish pressure after the Fed agreed to swap line arrangements and make dollar injections. The US dollar dropped across the board. US Treasury notes may also weaken in the near future. However, the greenback appreciated versus its main rivals today. Perhaps an upward reversal was triggered by expectations of a rate hike tomorrow. The US dollar usually climbs amid the Fed's hawkish decisions. It was trading at 103.40 in the morning. Although the greenback was moving in the bullish price carried over 103.30 and 103.50, it may sink again in the moment. The yen took advantage of the headwinds in the banking sector. Seeking shelter, investors rushed to buy US government bonds, which eventually led to the decrease. It helped the yen advance versus a weaker US dollar. Yet its victory did not last long. The greenback spread its wings again, so the dollar-yen pair was hovering in the range of 131 and 132.20. In the Asian session, the pair was trading at 131.80, gradually rising. However, bulls seem to not rise to give up. They are likely to make attempts to push the price below the important level of 130. Everything will depend on the results of the Fed's meeting. The US dollar index is likely to continue trading in the sideways range over the next few days. Traders should pay attention to Jerome Powell's speech at the press conference. Due to the 2-week blackout period, Powell has not provided any comments on the banking crisis, so he's sure to clarify future plans for monetary policy given the current situation. Powell may surprise investors with a rather unexpected decision. This is why one should be ready for certain risks. If this scenario comes true, volatility will spike significantly. Meanwhile, the Reserve Bank of Australia meeting minutes published today did not bring any surprises. At its meeting on March 7, the Reserve Bank of Australia confirmed that it would consider a pause in the monetary tightening in April. Since May 2022, the Australian regulator has raised its benchmark rate by 350 basis points. For the Australian currency, this is a bearish factor, especially amid a possible rate hike by the Fed tomorrow. Following the release of the Reserve Bank of Australia's dovish minutes, the Aussie weakened against other major currencies. The AUD-USD pair broke through the support level of 0.67. In the Asian session, the pair was moving in the downward channel of 0.6675 and 0.6726. However, some technical indicators signal an upward reversal despite a retreat. The New Zealand dollar has no drivers to rise against the US dollar despite high volatility and a fall in stocks. The Reserve Bank of New Zealand said that it saw no immediate need to request a reinstatement of the expired US dollar swap line that expired in 2021. Prime Minister Chris Hopkins urged exporters not to rely so heavily on China, saying it's important for them to diversify their uncertainty. These remarks caused a fall in the New Zealand dollar. The Kiwi dollar pair slid into the downward range of 0.6186 and 0.6258. In the Asian trade, it was trading at 0.6188 and it's likely to keep dropping. And that's all for now. We wish you only profitable deals. Don't miss our next video reviews and see you soon.